Hi, and welcome to No Nonsense Nonprofits. I'm Sandra Ray, founder of Sandra E. Ray CPA, where we alleviate financial headaches so that you can create a bigger impact. Today, we're going to talk about the Form 990 and specifically compensation reporting. As you know, the 990 is a public document, and compensation disclosures are among the most reviewed and scrutinized pieces of the document. Today, we're going to talk about issues to help you understand what might arise and reduce compliance and reputational risk. Making sure that compensation is properly reported on the Form 990 is important because there are growing expectations from IRS and state regulators, our funders, our donors, even watchdog organizations. They're looking for transparency. They're looking for reasonable executive compensation, and they're looking for strong governance. So even with accurate reporting, we can have questions that arise. And it could be because reporting is inconsistent. And we'll talk about why that is in just a moment. We could be explaining things not poorly on the Schedule O, and we can have some misalignment across the different sections. It's built into the Form 990. The different sections report things differently. And if people are uninformed, either on the preparer side or the reader side, that could cause some questions. So let's get started with the basics. Compensation shows up in three places on the Form 990. First and foremost, Section 7, Part A. It's the list of officers, directors, trustees, key employees, and highest compensated employees. This is where we show who those people are and the compensation that they receive. And that is compensation not only from our own organization, but from a related party. The next section is Section 9, our statement of functional expenses. Officer compensation is reported on its own line, and it's broken down between program, management in general, and fundraising. And then finally, if required, we have Schedule J, where it provides much more detailed information regarding compensation for the individuals and is often the source of many of the follow-up questions. So we want to make sure that we've got our information consistent among all three parts. Now, let's talk about the reporting periods. There is some inconsistency in the 990 if you're a fiscal year-end organization. The reason being is Part 7 on the list of officers and board members and Schedule J use the calendar year. We want to tie that to the W-2. But Part 9 is the organization's tax year or your fiscal year. So if you have a fiscal year, what you're reporting is going to be different than Part 7 and Schedule J. And you may want to explain that on Schedule O. So if you're a fiscal year organization, not only do you have to track compensation by your fiscal year, but of course you have to track it for calendar year for reporting on your W-2s, but also for the 990. And that includes compensation for independent contractors who are officers and key employees. You need to track their compensation on both timeframes. So reportable compensation. What is reportable compensation? Anything that goes on a W-2, box 1 or box 5, generally whichever is higher, that's going to go on the Form 990. But like I just mentioned, if you have any directors or trustees that are getting 1099 compensation, that also has to be, as an NEC, that has to be reported. And then we have to look at our related organizations. Are our officers and directors receiving any compensation from related organizations? That is also reported on our Form 990 on Part 7. And then when we get to Schedule J, we have to detail that out. What is the base pay? What are the bonus and incentive pay? Is there other reportable compensation, such as severance pay or prior period payments made in the current year? That would be our payroll accruals, or maybe a bonus that was earned in the prior year that was actually paid in the current year. Those are the kinds of details that Schedule J is going to get into. I also want to talk about our deferred compensation because a lot of times deferred compensation is missed. So obviously that's our qualified and our non-qualified retirement plans, our our IRAs, our SEP IRAs, our Roths, our 401ks, all of those qualified and non-qualified retirement plans are part of our deferred compensation. And it doesn't matter whether they're funded or unfunded, they need to be reported. And additionally, the vested versus unvested, that those need to be reported. And then there's certain amounts that are reported even if not yet paid. So there's some additional types of payments that have to be on the Form 990, even if it's not paid yet. That was compensation. Let's talk about benefits and what is and is not reported. And it may be easier to start with what is not reported. So any expense reimbursements that are made under an IRS accountable plan, which means you have a request, an expense form, receipts, those kinds of things, those are not reported as benefits. It is deductible, or it does show up on the statement of functional expenses, but it's not included in compensation for our officers. Other things like de minimis fringes, those small things that employees get, use of the office copier, those kinds of things, use of parking space, maybe those free lunches that you provide during meetings, those kinds of things, those are de minimis fringes and don't have to be reported. And then working condition fringes, such as business use of vehicles or business use of an employer provided cell phone, that is not reported as benefits on the Form 990. Now, things that we are going to be reporting, especially on Schedule J, are benefits, things like health, life, disability, and long-term care insurance. You have a medical reimbursement program, that's reported. Dependent care and tuition assistance, that gets reported. Housing benefits. Now, this depends on the tax treatment of those benefits, but we need to look into those. If we're providing housing benefits to our key employees, then we have to report those as well. So our key takeaway here is benefits can create discrepancies if not tracked properly. So you're going to want to make sure that you're tracking what is supposed to be reported on which schedule and whether it's paid or unpaid. If you're a cash basis reporter, you still have to report that accrual on Schedule J. So there's some differences there. And again, if you're fiscal year end, there's going to be some discrepancies with the timing period of what gets reported on the statement of functional expenses versus the board list and Schedule J. I want to talk a little bit about related organizations. Compensation from related organizations must be disclosed on Part 7. Related organizations include organizations like parent or subsidiary organizations, supporting or supported organizations from that we may be involved with. We're looking at those organizations where our boards have a significant amount of overlap. So we want to report that. Limited exceptions exist, but they are not applied uniformly to each of the sections. Many of them don't apply to Schedule J. So you're going to just have to get into the details or consult your knowledgeable expertise 990 preparer. Now, I want to talk a little bit about risks and best practices to avoid them. So some really common risks are inconsistent numbers across the Form 990 sections, missing deferred compensation or benefits on your reporting on your 990, using the incorrect reporting period, or overlooking related organization payments. Now, to avoid this, what we want to do is ensure our compensation is reviewed holistically and not just tying it to the payroll records. You want to make sure that you're picking up all that deferred compensation. You want to make sure that you're picking up all those benefits, and those don't tie to your 941s. Make sure that you're reporting not only calendar year, but fiscal year for both compensation and benefits, and that you're reviewing your related organizations annually. You want to be in communication with them, because what one organization reports should be consistent with the other. And definitely involve an experienced 990 preparer early in the process. Takes a lot of time to go back and refigure it, rather than getting it right as we're tracking it. So just to wrap everything up for you today, the Form 990 compensation reporting affects compliance, our organization's reputation, and of course, donor confidence. You don't need to know every rule, but you must ensure that you're asking the right questions and the right systems are in place. So I encourage you to review your compensation tracking process, assess the Form 990 consistency before filing, and consult your experienced 990 preparer for complex situations. I hope this was helpful for you today. And if you have any questions regarding this or other topics, please put that in the comment section below. We will get back with you. And as always, we appreciate your likes. I want to thank you for joining me today. And remember that creating a bigger impact starts with stopping the nonsense. If you're dealing with nonsense in your nonprofit organization, we'd love to help you cut through the noise.